Okay, let's get going here. Good morning. Good morning. Um, Nothing much to say about LB. It had that little bounce anyway. Just in the list of some stocks taking little hits here this morning. In any event, this stock market, it's kind of getting tighter. I guess the spring is winding here as to earnings versus China versus impeachment versus who knows what's coming. Anyway, let's take a look. Let's just look at SPX, start with the cash. We're at the top of the range. I think it's exactly insanity, Alex, uncertainty. It's not pleasant for sure. The erratic movement, even how, things started out yesterday, moving up. There were certain stocks that, we were in that looked great. And then, buyers just, they just got scared of whatever heights, market at heights. Those stocks had definitely potential to move up. They had what we call a void. There was a pattern and so on, like the MasterCard. And there was a few others, just how the market, started to head to the downside. It had jiggles and, anyway, it's kind of what this market's been about. One day being, it's a brand new bull market followed by an afternoon or the next day of, depression coming and things just back and forth, as we had here in August. And then, the gap up and at least this continuation pattern correction bar got at least to the top of the range. And it sure looked like, well, that bottoming tail bar right there really looked like, hey, we're off to new all-time highs, and it made the peekaboo new high, and down the chute it went back down to the top of the range. And here we are close up toward the top of the range again. So we'll see. And as we do every single day, the prior day's high is our first reference point of resistance, and the prior day's low is the next reference point of support. 1 second here.
Greg, we aren't seeing your charts or arrow properly.
You're not seeing no charts?
Well, I see Macy's the whole time, but
That's weird. Hold on. Let's redo it. Oh, I know what I did. I think I clicked TC2000 instead of eSignal. Anyway, here we go. We should be good, right? And I was talking about the erratic price movement there and this bottoming tail bar, which is a similar pattern to this one. The first one is the highest probability one, but the second one could have taken off, right? We always know a pattern, even though it's at resistance, it could take it out. But, the S&P's made that new high there, peekaboo, and then back down to the range. And now we're close to the top of the range. We had the wide range bar. We had the inside bar, 1, 2, 3 continuation pattern, which I talked about yesterday. The fact that, hey, you know what? We're close to this area. This is not the 1, 2, 3 continuation pattern that we look for as a textbook pattern. Nonetheless, it could have gone higher. I think more of the ideal pattern, just as a reference point as to your future reference points of patterns, would have been if this bar would have taken out the inside bar's low and then sprung back up again. That would have been a better pattern because there was a little bit of a shock, maybe taking out some stops to get through this high. Now, this market just being, so news driven and filled with uncertainty that it's just unbelievable. Like one day you look at the news and market's up on hopes of, positive talks with China. Today, there's concerns about China, and it goes on day to day. That's why I call it a schizophrenic market, and it truly is. So that uncertainty is still with us, and as we get closer into the end of the year, the markets have survived the worst part of the year, historically, September, October, we're up near all-time highs. So buyers are not running away, although they're could be scared to death on a day-to-day basis, and then buy the next little dip. So we'll just have to see how it goes. So far this morning, things are going nowhere. You can see markets are down a little bit, and kind of a mixed picture down here between red and green. So kind of tough to get involved here with any real commitment as to looking for a meaningful move. But we'll just see what the day brings. That's all we could do. Diamonds, inside the larger day, so just a consolidation. The prior day was a consolidation. The last 2 days, I should say, were consolidation days after, the power trend day. Once you look at the 5-minute chart, this was a power trend day. It backed off that day, but you know how the markets were trending up that day, very bullishly as they cleared this resistance. And then it's like, okay, we're not so sure what to do. now that we are committed to the long side on this day, everybody just got backed off from there, and then so far it hasn't broken down. So no reason to start running for the hills here. But if today breaks below these 2 bars lows, I think that opens up the door to some downside. Maybe not meaningful in the perspective of this move up, but from an intraday point of view, we could see, a decent down day. We'll just have to see how it goes. Spiders, similar, but at least it took out the high, and it looked like it was going to keep going, and then it didn't. It looked like it was going to take off, and on this little pullback there, it bounced to a new high on the day, and then when it didn't follow through, longs just said, the hell with this. You can't trust this market, and down it went until it came down here into the gap fill area, and then buyers felt comfortable to, at least for a move up toward the prior breakdown area. And so now just going sideways, down a little bit, but chopping around. And let's get somewhere. I'm just reading some comments here. Yep. So let's see what the rest of the markets are doing there. Qs, and they're the ones showing relative strength, but as they got closer to the resistance, buyers said, I'm not ready to, continue here. This market's a little too crazy. So here we are, another week, still within this trading range that's been going on for, several months. Other than this little dip down here, this is where the majority of the market has been over the last 7 months or so, just in between this 182 area and this 195 area, give or take a little, not quite there yet, didn't, it's poked down, so on and so forth. So little fake outs on both sides. And let's see what happens here. And I guess we're going to go into next week. There'll be more talks about China and impeachment, and earnings will pick up steam, and we'll see where this market wants to take it. And then, of course, I think week after next, we got the Fed. So October, I don't know that October has a lot of promise. As traders, we just try not to think too far ahead. We look at what the trend is, trading range, sideways, up at resistance, the long side obviously has more risk than it did down at the bottom of the range. So we'll see how long it can consolidate up here. The longer it goes sideways up here, well, the way we interpret that is it's absorbing the supply, and it's potentially bullish, but of course it's got to break out. It could go sideways for a while and break down. So trading ranges within trading ranges, not a good environment. Right? So that spring is winding. And Qs, you can see a little poke up above there and came back in. So I think today, I'm just going to use this line for now. Right here is our line in the sand. You got an upside breakout, shakeout, failure, call it what you want, call it a head and shoulders top, call it a shock, a break below this. Day traders should be looking to short this market and seeing how far sellers will take it down. So, I mean, that's what I'll be looking to do. Break down below here, thinking short. And if it just blasts through there, well, then it's either continuation pattern or it's a retracement pattern to retest that area. So we'll just have to see how that goes. But that's the bias. Break below here is bearish. If it takes out the high, well, that's definitely bullish. But the upside, you got 8,000, which it backed off from once already. Maybe it can get through it today. But you got 3 days. Well, this day is still developing, but for the now, let's just say 3 days at the top of this bullish bar with those bodies up there, which we look at as being bullish. But something being bullish has to end up actually being bullish, right? So meaning we can have a bias that this price action is bullish, but at some point the spring has to pop and it's got to prove to be bullish. So if it goes below here, well, and get into the void and so on. We'll just see what happens here in the room as that unfolds. The Dow, similar story, a little bit of relative weakness. It didn't get above this area very much, but going sideways at the top of this bar, it's the same darn story here. We've got this several weeks of these markets trading in a similar way. And you can see the same sideways range here, and we'll wait to see, does it break down or does it take out the high? The Russell has been the best performer. It's coming closer to some resistance here. Let's just twist this over here. We talked about yesterday, that the concept of, we've got a resistance area, but how many times has it been poked, so to speak, to weaken it? So we had that poke and back off, and another one, a little less of a back off, another one, and so on. And then this little rally here, and it's gotten deep into this area now. And so now, as we look at these different markets with little trading ranges, I look at this and say, well, do we have an M top here? And maybe we do. Can it push down through this low? And if it does, and the other markets are going down, this bar could result in a big red bar, negating this breakout bar. So we'll see. Most times you get the inside bar at the top of the range, but this is what we're starting with today, with a lot of sideways price action, and we'll just see what happens in the first 30 minutes of the day as to which way things want to go. So far, I can see that sellers stepped up again, which is what they typically do, and then we'll see if more sellers want to come in and break it, or whether they hold. And if they hold, and this is going up, and the others are coming out of the top of the range, well, then we're thinking long for day trades anyway, and we'll see how far it gets by the end of the day. Crude oil, it's up here a little bit, just slopping around, not much going on there. But you had, at least on the 60-minute chart, a push up above resistance, and buyers stepped up as they should on the pullback toward the breakout area. And now as it gets to resistance, it stalls. Typical price action. Bonds are up here fractionally. They're kind of jiggling around, and there's our intermarket relationships go, and could give us some guidance as to which way the equities are going to go. Well, if bonds break out above this area, and you can set an alert on the bonds or TLT and see if they break higher, then we should see some pressure on equities. So you can see the move down and the bottoming tail bar, so buyers are beginning to step up there. Gold down a little bit, just a lot of chopping around here. We've talked about this, looking for this turn to occur. I guess it's going to be, or possibly going to be, next week. And silver actually looking a little bit better, that kind of holding this area, but still within a range. But like the action, we'll just see. It's just, again, everything's range bound here, so it makes it obviously more difficult. Just going to take a peek at the euro here, which is, the Brexit thing, and this had a nice rally, so the dollar's coming in, and some believe that weakness in the dollar is good for equities, meaning those companies that do business overseas can be more competitive. So we'll see if that actually shakes out over a little while. And just taking a look at the pound here. Yep, popping up. So I'm liking that Brexit news going on. And just look at the transports. They're stalled here and just in the middle of the trading range. So trading ranges within trading ranges, these currencies doing better. We'll see. Have you heard a great interview on CNBC about oil information that the Chinese are new OPEC guys? No, but when it's on, we'll have to listen to it. Chinese now selling oil, getting into the oil market. That could be interesting. But anyway, let me hand it over to Dan. I'll check opens and some gappers.
All right. Good morning. Yeah, there you go. All right, so McGraw, this is our 0 DTE Friday, which we love. But, there's nothing no-brainer right now. But I think hopefully in the first 30 minutes, we'll have a better idea of what's going on. Weekly options opens, Amazon. We have a put spread that expires today. It looks great. Boeing's been a problem child ever since. It doesn't look good here on the 15, but we're still out of the money. The 367.5 that expired today. So we'll keep an eye on it. I have the stop in there. We'll take the stop if it gets hit, but hopefully it holds. Baidu a put spread for next week. Google put spread for next week. Honeywell put spread next week. MA put spread next week. BMW put spread expires today, the 150s. So I don't, see any negative gaps. So that one should expire for full profit, hopefully. Swing trader, CBS, long stock, and we sold a third into strength yesterday. Deck, gapping down here a little bit, but gapping down to support, so it's fine. EVBG, we're long stock, and that's holding fine. Home Depot, covered call. HFC, long stock, and it looks good. Yeah, Greg, I was thinking I'm going to start building some charts here to do an MT live on red and green bars ignored. And here's a beautiful one. Over the high, if this red one gets taken out, it looks higher. Let me write myself a note. IRT, we're long stock, that looks great. Transports put spread that expires today. We have the 175s. Look at that, $13.50 away. So that's going to be full profit. I couldn't imagine what would happen in the market if this sold off that much in one day. Jabil, covered call is a core trade. Looks great. Another example there. Red bar ignored. Kim, long stock. It's a core trade also. LGIH, put spread in the housing sector. NVIDIA, we have a covered call. And we're short the 192.5s. And I posted an adjustment yesterday that into the close. If it's under that, sell another one for next week. If it's in the money, then roll it to next week. PDD, long stock, SITC, long stock, core trade based on the monthly, inverse head and shoulders, square, long stock. Yeah, I saw it gapping up this morning. Now I gave it all up. Target, this expires today, and I posted, and we're short the 113 and gapping down here a little bit, probably with these other, I don't know what's up in retail, but you know, there's some weak, some retail's getting slammed. So I'm guessing that's down with that. But we have a huge open gain in that trade. Below, covered call is a core trade. William Lyons Home, we picked this up on wide range bar breakout with a strong sector, XLE, put spread for November. And a subscriber, I didn't think the 5-minute high got hit yesterday, but a subscriber came back and told me that it did. So I posted that as an open long, and that looks like we need to leg into a covered call. Opens here, not opens, gappers. This is not a gapper, but McGraw, you asked me about it, spot. It's a bottoming pattern. I need more of a something something, but it's worth watching. J&J getting slammed today, 132, way the heck down here. So now that's a breakout. That's a breakout failure. Slammed right back into support. I think Greg told me they found asbestos in their baby products. M, 15 bucks. Gapping right there. Yeah, I remember one of you. Oh, voluntary recall. Okay. It is a double bottom on the weekly, but I just wasn't convinced of the turn. GPS 1650 gapping here. This one's getting slammed, Gil. On 20. Wow. Wow, 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 wow. You know that's a big gap when your monthly chart doesn't even show it. Wow, I don't know what's up with that. Lima Bravo, 17 bucks. Bearish gap. Look, I mean, these must be, you know, there's a definite difference in these retailers. I mean, some of them are trying to bottom here, but they're in nasty downtrends on the monthly. But the big ones, look at Walmart, the big stores, Target, Ross. The big ones, look at that, Dollar Tree are doing great. Expo, I think, had earnings 66. That's a bearish gap. Now it would be a tier 1 if it were gapping at 68 bucks. Gapping under multi-month trading range. It's still bearish, but you know, the bigger the gap, it's messing up my reward to risk. But that's worth watching. I'll put Expo in the upper right. 3081. This could be a good day trade short. Yeah, look, it's gapping right. Yeah, so it's gapping right under this with a price void here. I don't see any volume though pre-market. Let's put that here. Um, 2242. So that's a bullish gap. That is, you know, that's a beautiful buy setup. It broke out a little deeper than I liked, but I like the 180 reversal right here. CVTI 1549. You're spotty, and I'm just going to delete you. Cat got a downgrade, 130. No great pattern. pod, I don't know what the news was on that. TW, I think, had a secondary offering. Pat's talking about STT 61. Oh, yeah, no, I have this one on my watch from a couple days ago because I love the weekly. Monthly still in a downtrend, but look, 100% retracement, controlled buy setup, 20 MA curling, 2 bottoming tails, and a price void. That's a beautiful target. I don't know, 65 to 70. So that, yeah, that's in my list up here somewhere. Yeah, it's right here under J&J. There was my J&J and there's STT. BDN. I don't like the pattern. PBCT, I can't tell where it's gapping. We'll come back to it. INDB. I can't tell where you're gapping. It's my pre-market. Yeah, my pre-market gapper's working. And spiders are now, everything's selling off. Wow. Look at diamonds are worse. So now this action into the open is favoring the call spread side, McGraw. I don't know. I'm not watching the news. Did somebody blink? Ozark, 28 bucks.
They're still within the hourly range, so could get whipsawed.
Yeah. I know. I was thinking that today might be a nothing. CMG got an upgrade. This, Alex, remember that other one we saw yesterday that McGraw pointed to us? This is what we call a symmetrical triangle. If you draw a trend line here, lower highs, you draw a trend line here and it's higher lows. So that is going into an inflection point, which suggests that it's going to bust out of the inflection point. And with the gap up, I have a bullish bias. So that's going in a little window right here. That looks great. All right, Gil, we saw earlier. So I guess that was earnings. ETH. It's bottoming pattern, but look, you got flat 20 and 50 now, bobbling around. McGraw, if you can get an 18 put spread, that would be a no-brainer. SYF, you're garbage. MN, garbage, no volume. GNTX, whipsaw mess. CFG, we already looked at. Slob at earnings. It's slopping around, but a lot of these oil stocks, they're trying to turn, but it's not convincing yet. So I'm not going to even worry about you. Like, look at XOP. XOP would be okay over, today's Friday, so Thursday, Wednesday. If it can get over Wednesday's tail, then McGraw, we do a put spread, because then that's given me more proof that this entire attempt to bottom is going to hold, because you had a breakdown failure, you had a bullish gap, you got a bottoming tail, and then if it can, take out those tails. Oh shoot, our MA just got ugly. Why isn't it printing here? That's weird. That's showing 274, but my daily is still showing yesterday's close.